very warm welcome. You're watching the daily edition of Your Trades. This is Priyanka along with me. Ankita is today. The bouts of volatility, what we saw, Ankita, and then throughout the trading day. And we've closed, in fact, we slipped below 24,900 also at one point in time. Clearly, nervousness across the indices, what we saw, and globally also, that what we are also mirroring it. Mid cap, small cap, both were down by 0.5%, barring FMCG and consumption. All the sectors, and to some extent pharma also, all sectors were in red. In fact, deep red is the color for PSU, banks, metals, a couple of the brokerage notes that clearly had an impact on the stocks. But before that, the big story for the for market, not just for our but for global markets also, was crude oil, which is consolidating at lower levels, slipped below 70, and that's what the clear trade we saw on all the oil explorers, ONGC, Oil India. In fact, Oil India, ONGC did, this is a second brokerage note, Ankita. Yesterday there was a note by Citi, today Nuvama also came up with a sell rating. Clear impact on ONGC. Stocks like Tata Motor, they fell by 5% because UBS downgraded the stock. There was a sell rating, and hence many stocks which were reacting because being crude derivative like paint stock, lubricant, they were reacting. Somewhat neutral impact on the OMCs. So more or less a very nervous trade what we saw. Trend has changed to short built up on Nifty, Bank Nifty. To understand what is for the index traders, as well as what are the specific recommendations at this point in time, we have Ruchit Jain, who's recommending us trades also. Ruchit, welcome to the show. Tell us the trend is changing at a rapid pace. One day we see recovery, a smart recovery, market stabilizes a little, and again the trend falls. In fact, it gets on the flip side. What do you have to see on the markets right now? What is the immediate support levels that you see on Nifty and Bank Nifty? Both have seen quite a significant lower levels.
Yes, hi, very good afternoon, Priyanka. Well, since last 1 week, we have seen that markets have entered a corrective phase where, post that especially a sharp correction which we witnessed on Friday, the momentum readings gave a negative crossover on that day. So, which indicates that in the near term, we would not be in a hurry to resume the uptrend that we have seen earlier. Now, the fact is that the crucial support which is seen in the Nifty is around 24,650 to 24,700 zone, where the 40 days exponential moving average is placed. Till that is intact, it does not seem to be a significant price-wise correction. There may be some time-wise corrective phase where market would consolidate in this range of 24,650 on the low side and 25,150 on the higher side. Only if whenever we see a breakout on either side of this range, I think then we should expect some directional move. So as of now, we are expecting some time-wise correction or the consolidation to continue for next few more trading sessions. Maybe I think that event which is lined up on 18th of September of Fed interest rate decision, that would then lead to that direction move in the market. Till then, you might see some consolidation with 24,650 would act as a very crucial support for the index, and 25,150 would be the resistance zone.
Okay. In that case, do tell us that what should one pick up from the FNO trends, especially if you talk about the FIs. They have turned out to be buyers for these last 2 days. Yesterday also they made a significant buying, and before that also. But DIs, the trend looks little reversed over. DIs were net sellers yesterday. And in fact, a huge amount of stock futures they've sold off, stock options FIs have sold off. What is the trend that you're picking up from the FNO data in terms of FIs? And is there some sign of exhaustion? The DIs have also started selling off.
So there has been some activity in the cash segment, but in the index future segment, I think both DIs as well as both client section as well as FIs have not been forming any fresh positions on either side. If you look at the long short ratio of FIs since last 2 or 3 trading sessions, it is stagnant around that 64% mark. And the client segment, which includes retail traders and HNI traders, their long short ratio is around 46-47%. So data is more neutral. Because the existing positions which were carried post that expiry, post the last series expiry, are getting continued, but we are not witnessing any formation of fresh either long or shorts in the index future segment. So hence I think there is more of a stock specific activity that is happening, and until we see any kind of new formations or new open interest built up coming in the index front, I think no, that's why we do not expect any kind of significant directional move in the index.
Right, Ruchit, this is Ankita also joining in. Clearly, there is volatility in the market. So, in this market, what is exciting you? Where do you see value?
Yeah, good afternoon, Sangeeta. So two stocks are there from a trading perspective. One would be on the buy side and one would be on the sell side. So we are clearly looking to buy only the outperformers in this falling market. And InfoEdge, Naukri is one of the stock which is looking quite positive on the charts. The high top, high bottom structure is there in the recent correction. The 40 EMA acts there is a good support for the stock. Again, today, if we see the price up move getting supported by good volume, so I think InfoEdge could stand out in the near term. One can go long with stop loss below 7,500 for potential near-term targets around 7,950. And on the short side, Aarti Industries would be recommended. So you can see the strategy that buy the outperformers and sell the underperformers. Post that last quarterly results, we have seen a sharp correction in Aarti Industries. And after that, in spite of the good recovery in many of the stocks within the same chemical basket, Aarti Industries is one stock where the relative underperformance is there. Today, if we see the F&O segment, then about 10% open interest increase is seen along with the price decline, which clearly indicates a fresh short formations happening there too. So I think that underperformance could continue in Aarti Industries in the near term. So short-term traders can look to short Aarti Industries with stop loss above 588 for potential target somewhere around 550.
All right, Ruchit, thank you so much for joining us and thank you for giving us your picks. But with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back. Welcome back. You're tuned into Your Trades, and it's now time for the word from the wise. Mihir Vora, I beg your pardon, the CIO of Trust Mutual Fund, believes that the commodity business in IT will not help the space grow any beyond single digits. Let's listen in to his views on the sector.
The commodity business that the large IT companies are doing, the kind of boring stuff, is not going to help them grow beyond single digits. So I think the large profile companies I would consider as moderate risk, moderate return kind of a trade where you don't expect multi-bagger kind of returns. But then, like FMCG, you grow at 5, 7, 10%. And that's the kind of long-term returns that you expect from those stocks. The fun probably is in picking stocks in the mid caps and small cap IT stock because they're companies with different business models, with different verticals and skill sets, which are building some capabilities which are higher growth in their nature. So I think companies which are helping in the ER&D space, something to do with the EV space, something to do with specialized service for financial companies or banks globally, insurance, etc. Or even for that matter, doing work on AI-linked stuff. Those are the kind of companies which will grow faster, and that's where the stock picking opportunities are. So in IT, we are basically going in with a stock by stock approach. The larger companies probably give you kind of predictable but boring kind of returns.
All right, that's the word coming in from Mihir Vora from Trust Mutual Fund. But then let's talk about Tata Motors. In fact, Tata Motors was the top loser today. It fell nearly 6% on the note by UBS. And the reason is that BMW has cut their guidance for the automotive segment and the sell note from the UBS. These two reasons coupled together. But what does it mean for the stock going forward? Somit is here with more details on this.
Well, Tata Motors remains in focus on the back of a couple of news. Firstly, BMW, which is a luxury car, has given a warning when it comes to the 2024 guidance. They have cut the 2024 guidance for the automotive segment. They have also lowered the margins, and they are saying that China, which remains a key market, they are seeing some muted demand on that front. Now, China also remains a key market and the most profitable market, in fact, for Tata Motors JLR division. So, hence, this could have a negative bearing or a negative impact on Tata Motors as well. Apart from that, UBS has also come out with this note where they have maintained their sell rating on Tata Motors with a target price of close to around 825 rupees, and they are saying that the discounts when it comes to Range Rover has seen a sharp spike in the last few months. They are saying that earlier the discounts were for JLR models were near zero, which has now started to increase because of lower demand. So that is also one of the major concerns coming in for Tata Motors. They are also saying that rising discounts, moderating growth and lack of new hybrid or normal petrol diesel engines could result into a significantly lower financial performance for Tata Motors in FY26. Apart from that, they are also saying that earlier Tata Motors had a good run on the back of new launches. However, that is expected to now slow down going forward. Hence, multiple concerns coming in for Tata Motors, and as you can see, the stock is also down around 5% in trade.
Well, all right, keeping with the auto sector then, let's look at the auto sector channel checks that came out by Nuvama now, where they have maintained a buy on TVS Motors, Hero Motor, M&M and Maruti, while they have maintained a hold on Eicher and reduced the target price. Let's go across to my colleague Sharad, who's joining in with more details from the note.
Well, as a positive channel checks are suggesting, especially for the festive season upcoming, and this is coming in for the three segments, the two-wheeler segment, the passenger vehicle, and also the medium heavy commercial vehicle segment. Now, the two-wheeler segment, if you look at it, the festive demand is expected to grow at almost 15%, led by strong rural demand and a continuing urban demand, while the mass market OEMs, they continue to outperform the premium OEMs, also are seeing strong traction. The PV demand is expected to remain moderated and it is expected to be around the single-digit mark. UV demand is expected to outpace the hatchbacks and resulting in an outperformance for M&M and Maruti Suzuki. Overall, the dealer inventories, however, that's a cause of concern. They are high, especially for two-wheelers as well as passenger vehicles, coming in at almost half to 2.5 months. But the built-in anticipation is already there for a strong festive period. Now, let's look at the target prices, changes which have happened. Especially TVS Motors is something which I'd like to point out. The maintained buy rating, the target price has been hiked from 2870 to 3200 rupees. For Hero Moto as well as Eicher also, you can see that important changes in the target prices have come in, and for M&M and Maruti the target prices have come down a bit, but overall the strong expectations from the Motown is expected when it comes to the festive season.
All right, that's a check on the list of auto stocks. Thanks very much, Sharad, for all those insights and the brokerage reports. Now, Gaurav is there with us with a list of stocks that were buzzing in trade today. Gaurav, over to you.
Well, yes. First, let's talk about BEL, because this company has won an order worth 1,155 crore rupees. Out of this, the order worth 850 crore rupees is from Cochin Shipyard for the radar system, and with this, the total order book has reached around 7,075 crore rupees. As a result, we saw some uptick in the stock price. Next, let's talk about Persistent System, because company has signed a purchase agreement with Soho Dragons for $4.7 million, and with this company will actually support the BFSI business, and as a result, we saw some uptick in this counter as well. Next, let's talk about SIAT, because company has commenced a commercial production of trucks and bus tires in manufacturing in Tamil Nadu, and they are expecting to reach a capacity of around 1,500 tires per day in the next 12 months, and as a result we saw some uptick in this counter as well. Next we have is Shriram Finance, because the management has exclusively told to ED now that they are going to list the general insurance company in the next 2 years, and this will be followed by life insurance segment. Other than that, CLSA has also maintained its outperform rating with a target price of 3,350 rupees, because the company has now guided for ROE expansion of around 100 basis points for the next 2 years. Lastly, let's also watch out for some paint stocks like Asian Paints and Berger Paint, because Brent crude has dropped below $70 per barrel, which is actually the first time since December 2021, and as this crude is very crucial for the manufacturing of paints, Asian Paints and Berger Paints are gaining in trade today. So definitely watching out on all these counters on the back of the news flow that we have received today.
All right, and it is time to wind down on this edition of Your Trades. Priyanka and I will take your leave. Thank you so much for tuning in.